What's going on, everyone? Welcome back to another episode of Crypto Catch Up with me, Benny. In this video, I want to go over, is cryptocurrency a new asset class, and tell you what I think. Now, obviously, everyone's got a different take on this, which is why it's an interesting topic. Because I was recently contacted by Reuters, the news company, from a journalist in New York who's looking to discuss, such information. Now, what I thought I would do is get a video out there before any stories get twisted. So let's get into it. Alright, so what we first need to look at is, what is an asset class? And what I've done is just written it down on the slides here for you. One, it saves me just talking to a blank screen, and it will help you if you need to obviously go back and just quickly have a look at some dot points. Now, an asset class is essentially an investment vehicle. So it's a security whereby it inhibits the same or similar kind of traits or characteristics as each other. But what's a security? Well, a security is a fungible, negotiable financial instrument. And when I mean fungible, it means just like our money, that $1 is $1. And if you buy a share in a company, that one share is equal to the same other share that you were to buy. They aren't any different. That is similar to our money and to what we talk about with Bitcoin and everything like that, which is why it makes sound money or hard money. Now, with this financial instrument, however, once again, if we've said it's an asset class, is a security, and a security is this, and it's a financial instrument, well, what's a financial instrument? Well, it's an investment of an asset that can be traded. It's an illegal agreement or a representation including any monetary value. So when we look at that and you compare it to, Bitcoin or Ethereum or anything like that, these are something that all have similar characteristics, such as what we're stating with the security there. They are fungible in the fungible tokens. Obviously, we have created non-fungible tokens, such as what Engine Coin has done with the ERC standard to have in-game items that are unique. And there's some form of trading that can be done in terms of that investment or that asset. So with that, what are some of the asset classes out there? So I've broken it up into two boxes here. The first ones are, your primaries. Your seconds are your more secondary kind of things. So your main ones you hear about are your bonds, so your government or your corporate bonds. They're a fixed income investment, and it's something that's, very low risk. A government bond doesn't pay you out a great return, but it's a fixed income that you'll get back at the end of that period for a particular rate. And if you're happy with that, good for you. But like I said, lower risk. Then you have commodities. So basically, tradable goods, grains, beef, gold, whatever you want. Equities or stocks, as some may call it, is the ownership interest, obviously removing any owing amounts to that, which is an accounting formula there for your equity. Then you have real estate, coins, metals, forex, other international, investment kind of materials. They are all, their own kind of asset class because they inhibit particular characteristics. So why do I believe that it is a new asset class? Well, it's something brand new. Cryptocurrencies are brand new. In the group of what they are, they inhibit similar characteristics to what we know as, money and other tradable items, but they are inherently digital. They're something that we've never seen before, and because of that, government and regulators are rushing to tax, to regulate and control, obviously, these particular assets. Now, the funny thing is, if we look at America, we're going to look at their kind of different organizations. So you have the SEC, so your Securities and Exchange Commission. It believes cryptocurrencies are securities. You have the CFTC, so your Commodities and Futures Trading Commission. They see them as commodities. Funny that. FINRA, so your financial organization there, they see it as money. And your Internal Revenue Service, or the IRS, which is the equivalent to the Australian Taxation Office, they see it as property, so capital gains. If we compare it to Australia and what we are doing with our system, it's great. We've made it legal tender. But when it comes out the other end, in terms of gains, in terms of, what you've been using it for, the government doesn't discriminate. They don't mind if you see it as a capital gain. They don't mind you see it as a standard income tax, because they will hit you where it hurts no matter what. Now, this is the biggest question though, is that with a brand new asset type or asset class, how are you going to handle the asset allocation or the strategy around buying and selling, your diversification? Do you apportion the assets, based on your goals, your risk tolerances, your investment horizon? So what we're talking about there is how long do you intend to hold the asset for? When we look at it from this perspective, it's very different to a very basic kind of strategy one might have. So when you're younger, you can play a riskier game because obviously you're not yet near retirement, which means you might have more equities or stocks that are higher risk than have government bonds, which are low risk. And obviously as you get older, one would expect to see that risk profile lower, to obviously make sure that you're going to have some money into retirement. So for me, it's working out where does the decision making come from in terms of buying this asset. Now, I'm not talking about trading it. I'm not talking about you technical folk out there that are, having a look at the charts and drawing lines on it and creating pretty pictures. What I'm talking about is how do you make a decision on an asset moving forward such that you believe, in the technology? Are we going to apply back testing and price history like they do with options? So something that I did early in my career was build an options backtester for Macquarie Private Wealth with one of my buddies, Bradley Hunt. And essentially it allowed us to upload 20 years of Standard & Poor's data or S&P 500 data to run different options backtesting strategies over, like the long condor, to do calls and puts and try to see what would happen with that. Is this what's going to happen with crypto? I don't know. Or are we going to use fundamental analysis on the ICOs, the STOs, white papers, developers, communities? Is that how we're going to determine, whether or not it's a good buy for a longer term investment horizon? Finally there, maybe we're just going to do it on animal spirits like the TA guys out there. And animal spirits was something that came out in 1936 by an English economist, essentially which talks about the human kind of psyche whereby we just make decisions, not on quantitative data, but just on the fact that we feel like it's going to go good, the market sentiment looks all right, the news is positive, let's go all in and buy it and hope that we come out the other side. That is something that I'm actually really curious about in people's thinking at the moment. Are they buying it because it's the next best thing? Do they even know what they're buying? And why are they buying it? Because what we can do is break cryptocurrency up into a few different buckets. These could be, cryptocurrency as an asset class, like we talked about before, bonds, equities, etc., kind of sit up in the main portion, then you have your sub portions in real estate. Cryptocurrency kind of has the same thing. So if we were to put it up in that top bucket, you have cryptocurrency as a whole, but then you have these kind of breakdowns. We could break it down into currency. As we know, there's currencies like Bitcoin, but then there's security tokens. But then there's also utility tokens that give you access to the protocol to do something within the decentralized application, the autonomous organization, or we could go even deeper into it and really apportion our assets by some really low-level fundamental concepts, such as this: cryptocurrencies, platforms, Neo, Ethereum, anything that's allowing people to build things off, EOS, a utility token, what people are saying gives you access to the protocol with really poor economics. Securities, commodities. So when I talk about commodities here, I'm talking about something that's a tradable good. CPU usage, all of that sort of stuff like Filecoin and Storage. They're giving you storage space. It's a tradable commodity within this digital world. Privacy coins. At the end of the day, guys, I believe it's a new asset class, but I'm interested to know how everyone's going to break down and actually invest in this as a new investment vehicle. It's a different kind of thinking. It's obviously going to take years to come to, you know, a loggerhead point where we know, you know, some form of stability has come into the market, or that we have this classification or a way to actually go about classifying these products. Because right now, most people claim things are decentralized but can't even measure it. And if you can't measure it, I'm sorry, it doesn't exist like that. We need to be able to have that fundamental proof. So, any questions, let me know. As always, guys, like and subscribe. I'm going to be doing a video next on why Ethereum isn't dead, because everyone's jumping on that bandwagon at the moment and it is killing me. So, enjoy the rest of your weekend.